Be like Warren Buffett. Pull out now and wait for the crash. There's just one thing. You are not a billionaire. Shit, most people probably don't even have $2,000 in their whole portfolio. Copy Buffett. And don't get me wrong, it's definitely interesting to look at what he's investing in to see what we can pick up and learn. But he runs a multi-billion-dollar conglomerate, and you are investing in your underwear eating Doritos. Not on the same level. You don't want to be building 2-3 shares at a time and then go, oh my God, he's selling, I better sell now. And then your 10 shares become 5 shares, and then you try and come on, you're shortchanging yourself. You're missing out on the ability to just compound and add to your positions over time. That's the real goal here. Plus, let's say you buy some stock in a company at $10 and now it's 75 and you think a recession is coming, and so you sell those shares at 75, and you're right, a recession does come and it drops to $50. Now you got to buy it back at $50. Maybe you pay short-term capital gains depending on the kind of account that you're in. A better plan is to just stay the course, remain consistent with your investments, assuming they're high quality. I'm talking ETFs and some very sound large cap companies, and just add to them periodically over time. Buying and selling and buying and selling. It's a waste of time. We're not on the same level as Warren Buffett. We're trying to build a portfolio here. Now, it would be very different if you were a multimillionaire investor who went in and said, I'm going to buy 10,000 shares in this company. And then a year later, I'm going to buy another 10,000 shares. And then you see this massive boom that we have in the markets over the last 4 years where stocks hit all-time high after all-time high. And now let's say you're up to 300% and you've got 20,000 shares. Well, then yeah. It would be a fool when markets are so overvalued to not take some profit off of the table and pull a Buffett in that case. You've got 20,000 shares. Why not sell half? But that is not most retail investors who are slowly trying to accumulate and invest for the future. I get that people are nervous and they're on edge and they think that Trump's policies may be devastating, but that's the key word, maybe. We don't know. So why play this game of I'm going to sell in anticipation of something that may or may not happen, and maybe it happens and it's just not as bad, or maybe it happens and it is terrible. But that would just present as a buying opportunity to scale in or further scale into your positions. Why is Warren Buffett selling? Who gives a shit? They sold more than 600 million shares of Apple in 2024. How many shares of Apple do you have? Now, why is he doing it? Well, probably for several reasons. One, a lot of these companies, like I said, have had huge growth over the last many years. Two, maybe he is anticipating a crash and he wants to sit on some cash. Three, he is a big fan of rebalancing his portfolio. If he's overweight, that means he has a large position in one company like Apple and Bank of America. It is a sound strategy, even if they're strong companies, to take some profit off the table. I'm not a financial advisor, and I'm not your financial advisor. So if you feel like it is the right move for you to copy Buffett move for move, go for it. Playing games like this just prevents you from compounding over time. Imagine you got 10 shares and you sell 5 because you think something's happening, and then you got to buy back the 5 to get the 10 that you had. Come on. If you do anticipate some sort of correction or crash in the markets, it might be a wise idea to sit on a little bit more cash so you can take advantage of the buying opportunity. On the other hand, you might be missing out on the opportunity for more growth short term. I mean, just take a look at the last few days. Markets are up huge. The Dow Jones just a few days ago went up 1,500 points. That's 3%. The S&P went up 2% in one day. And a lot of people think that this is like a sign of things to come. Look, Trump isn't even in the White House yet and the markets are flying. Man, this could be for a shitload of reasons. For starters, Wall Street could be anticipating a correction or a recession as well. So they're driving up the prices, take a little bit more profit out, sit on cash on the sidelines. Hey, maybe these corporate tax cuts that Trump has promised, rolling back the regulations, workplace and consumer, maybe all of these things, in addition with the tariffs, do cause the markets to crumble. Well, if these corporations are saving a lot on their corporate taxes and the markets drop, guess what? They're going to do stock buybacks. Nobody really knows what's going on day to day in the markets. Don't try to play these games of Buffett's doing it, so I'm going to do it. Oh, I'm strategizing, I'm theorizing. You're wasting your time. Just remind yourself that most retail investors are building positions slowly over time, a few shares at a time. Don't try to copy Buffett move for move. We're not on the same level as him. We ain't even close.